Hello, good evening, and welcome to this session on the basic technical analysis for investing. I hope you're all well. We're going to kick off. The others can join us as we go along. Uh, the session is not going to be a lot and detailed, hence the title, Basic Technical Analysis for Investing, because when it comes to investing, you don't need to go crazy with technical analysis. But sometimes it's good to know that's the basics of reading a chart, how to analyze a chart, and how looking at the chart might give you some idea as to when to buy that investment or when to sell it. So we're just going to be looking at that basic point of view from a technical analysis point of view. And then, of course, with these sessions is also an opportunity to ask any questions you have regarding investing, your portfolio, the stock market. So it's also a question and answer session. So if you have any questions relating to investing and the stock market, feel free to ask your questions after the presentation. Okay, so we're going to start. Like I said, it's just going to be basic stuff. We're not going to we're not trading, we're investing, so we're not going to go into crazy technical analysis stuff. Now, technical analysis, as we know, the definition of technical analysis is the study of charts to decide where you want to trade, where you want to enter and exit the market. So you can actually make also invested decisions by analyzing the chart of the stock or the market you want to invest in. So we'll start by determining what a trend is. What is a trend? Now, the interesting thing about a trend, especially when it comes to investing, a trend is slow dissemination of information. So I repeat, a trend is slow dissemination of information. So you find that, people who are very, very close to the markets, they're, glued to the markets, they might find out what's going on, or sometimes they might be part of the decision making about what's going on. So they either start to buy or they start to sell that market. Let's start with the buy. So when they start to buy, that market starts to go up. And then, other people in the industry who are not too close might get wind of that information and the effect on the market. They start to buy and the market starts to slowly go up. Then it gets into the public domain, and those who watch the markets closely then get involved, and it keeps going up. Then before you know it, the general public and the average Joe knows about it, and they too buy and just keeps going up. So that's what you call the slow dissemination of information. That's what actually, let me bring up a whiteboard. So like I said, let's say, for example, this is the start of the information. So, like I said, those who are very close to the information, they might either start to buy, and then the market starts to go up. Then those, that also in the industry, they might then start to find out what's going on, and then to buy starts to go up. Then, people who are in the investment market and also monitoring the market can get involved. So you could then say investors, they get involved, and then the market continues to go up even further. Then, it's now general public knowledge, and then the public gets involved and it keeps going up again. So that's what tends to cause a trend, is just slow dissemination of information. And then, of course, it can go the other way, where people who are close to the information sense something bad is going to happen, so they start to sell. And then those, again, same thing, those in the industry notice what's going on, then they start to sell, and the market keeps going down. Then investors too notice what's going on, they start to sell. And then, unfortunately, when the general public gets wind of what's going on, you can see the market has already fallen, and that's when the real panic just sets in. So usually you find that that's what causes a trend, is the slow dissemination of information. So this is where technical analysis sometimes can help you determine, where it's a good place to potentially buy your long-term investing, or if you're already in a long-term investment, there might be certain things that might make you think, oh, this might be a good time to sell and get out of what you've bought. And then to do that, you need to know how to determine a trend. So how can you tell a market is trending up looking at the charts of that market or that stock? And how do you know it's trending down? So you need to know how to identify a trend. Now, the market can only trend three ways. The market can either trend up, where you're looking to buy, or it can trend down, where you're looking to sell. And then if it's sideways, usually when the market is sideways, it means there's uncertainty in the market is unsure. So there's indecision. So you might just either decide to hold on to what you have, or if you're thinking about buying, then you might decide to wait and not buy till you see an indication as to whether it goes from a sideways trend to going up or a sideways trend to going down. So again, you can sort of identify this sort of trends by looking at the charts. So like I said, the market can trend three ways. We'll go through how you can identify the three trends. So number one, to tell if a market is trending up, you want to see if it's making what we call higher highs and higher lows. Again, let me bring up the whiteboard. So the markets, obviously I'm sure you all appreciate when I mention markets, it means any market: stock market, commodities market, currency market, fixed income, any market. So any market you're investing in, they don't just go up in a straight line and they don't go down in a straight line. So that's one thing to remember. The markets don't just go straight up or go straight down. Okay, so what tends to happen is that if the market is going up, it will first go up from a high point, then it will pull back down. That's what we call a pullback. So usually in the terminology for that is called a pullback. So it pulls back. So that's a pullback. So the market goes up, forms a high point here. We'll call it H for high. Then it pulls back. And then it forms a low point. We'll call that L. And then it goes up again, forms another high point. Then it pulls back. That's a pullback. And it forms a low point. Then it goes up again. And then it forms a high point. Again, forms a low point. It pulls back, forms a low point, and goes back up again. So what we're saying is that if you start seeing the market forming what we call higher highs, so you can see this high is higher than the previous high. This high is higher than the previous high. So it's forming higher highs and higher lows. So you can see this low point here is higher than that low point. This low point here is higher than the previous low point. So it's forming higher lows. So when the market is forming higher highs and higher lows, you can then say the market is trending up and you're looking to buy that market. And we're going to go to some live charts to see what we're talking about. So that's how you identify a market trending up. Okay, so let's go back to the presentation. So that's how you identify markets trending up. Or you say they're bullish, or you say they're uptrending, is them forming higher highs and higher lows, like I've just shown you, and then you're looking to buy. Now, if the market is falling, it's the opposite. So if the market is falling and trending down or bearish, you find that they start forming what we call lower lows and lower highs. Again, bring up the whiteboard. So the market will then fall from a low point. This time we call this a rally. When it goes back up, you call that a rally. So that's a rally. So we'll go back up from another high point. Then it'll fall back down from another low point. Then it will put that L, low. Then it'll rally back up again from another high point. And then fall back down from a low point. Then rally from a high point. So where the market is forming, you can see this low is lower than the previous low point. This low is lower than the previous low point. This high is lower than the previous high point. This high is lower than the previous high point. So when it's forming lower highs and lower lows, you say the market is trending down or bearish. And then you're looking to sell. Okay. So that's, and then, so if the market is making higher highs, higher lows, it's uptrending or bullish. And if it's making lower lows and lower highs, it's downtrending or bearish, and you're looking to sell. Now, if you're looking at the market, whichever market you're investing in, and it's not making either of them, it's not making higher highs or higher lows, or lower lows and lower highs, then it's probably just trending sideways. And there's indecision in the market, so you just want to keep out. Like say, if you're already invested in that market, you can just hold on while the market makes a decision. If you haven't invested in that market and you're thinking about investing in that market, it might be the time to just hold on, keep out, and see what happens. Now, so like I said, let's again look at what the sideways trend looks like. So if your market goes up, forms a high point, goes down, forms a low point, goes up, forms a high point. So if it's going to keep trending up, the next low should be higher than this low. But if it comes there, you can see it's lower, so you can't say it's trending up because it's from the higher high, but not a higher low. Then it goes up, forms a high, goes down, forms a low. So if it's going to keep downtrending, you're expecting the next high to be lower than that high, then it goes back up and it's higher than that one. So you can see once there's no pattern to it, it's not making higher highs or higher lows or lower highs, then you say it's trending sideways. And you want to keep out of the market, because usually when it starts trending sideways, it means there's indecision in the market. So you want to keep out. So this is just some examples. Obviously, this is from my trading charts where you can see the market trending up. So you can see this high, another high, another high. You can see the low there, another low, another low, another low. Obviously, it takes experience and looking at charts for you to be able to identify the highs and lows. And again, like I say, for investing, it's not crucial, but it's something that if you can read the chart, it might just be an added skill to have in deciding what to do with your investments. So you can see it's forming higher highs and higher lows. So you can say it's trending up. And then you can see with the downtrend, it's the opposite. Forms a low point there, goes up, forms a high, a low, a high, a low, a high, a low. So you can see it's forming lower lows and lower highs. So it's trending down. And like I say, when it's not doing anything, it's going sideways. So let's go to the website. Let's go to Hargreaves Lansdown, my investment brokerage account. Let's bring up any stock we do. Let's do Apple. Apple. Okay, so that's Apple. So we'll go to charts and performance. Okay, so you can see this is Apple. This is the chart over the last year. Okay, so you can see clearly that the charts. Let me see if I can make it bigger. Might not be able to make it any much. There we are. Okay, there we are. All right, so you can see now it's gone up there. It's from the high point, but you can see it's not forming higher highs and higher lows. If you can see here, it was probably trending down there. It's from the low point there, a high, a low. But you can see that high too is lower than that, but then it stopped. So it did continue going down. Then it's formed up from the high point there, then the low and a high, a low, and then you can see it's just going sideways now, and then looks like it's starting to fall. So you can see at the moment there isn't a clear pattern with the Apple shares chart. So, for example, if I was looking to buy Apple now, maybe I say, okay, I want to buy Apple shares. Looking at the chart, you can see it's not going the right way for me to say, okay, I want to buy. It actually looks like it might be starting to fall. So again, this is why just having an idea of how to read the charts might help you decide, okay, maybe it's a time to leave this alone and wait and see evidence of it going back up before you buy it. Now, let's see if we can put some of this into practice. Because again, it's actually how you apply what I've just said into decision making. That's the key. So this is I'm going to open this up to all of you. So the market goes up, goes down, goes up, goes down, goes up, goes down. Okay, so looking at this, who can answer the question at what point would you buy? At what point, anywhere along this, at what point will you buy? At what point will you buy? And why? So from what we've just explained to you, let's see how you can extrapolate that into some decision making. That's the key. So what I've just drawn here now, who wants to have a go? You can raise your hand. Who wants to have a go at what point on this whiteboard would you say, okay, I want to buy? Who wants to have a go? You're all still scratching your heads. Because again, usually when it comes to this charts and technical analysis, is how do you interpret the knowledge you have and how do you apply it into a practical situation? So you have to now start to think. At what point will you buy and why? I'll give you another minute to think, and if no one answers, I'll give you the answer. Well, let's see if you guys can think out of the box. And again, actually, while I'm waiting for you to think, this is actually why I always stress to people who are investing that they shouldn't worry too much about technical analysis. And even that's why during the course, on the investing course, I don't go too much into technical analysis. Because as you can see, technical analysis it can be quite tricky. It requires a lot of practice, a lot of looking at charts. So it's more relevant to traders than investors. So if you find it confusing, don't worry. Like I said, when you're doing long-term investing, the key is your fundamental analysis, not the technical analysis. But like I say, if you can add some of this knowledge, fine. But like I said, if you find it too confusing, don't lose sleep over it. more often than not, I don't use this to decide when I want to buy. I do sometimes, but not all the time. Okay, let me give you the answer. So, like we know that if the market goes up, forms a high point there, then it will fall back down, form a low point. So you notice that by the time it breaks this high point, when it goes past this high point, there's a tendency, not a guarantee, but there's a tendency for it to go up to form another high point when it goes past this previous high point. So same again, if it forms a high point, falls back down, forms a low point. Now, if it starts to go back up, if it goes past this high point, then there's a tendency that it's going to go up and form another high point. Tendency, not a guarantee, tendency. So with that knowledge, you can say that, okay, let's just assume, for example, this high point is, let's say 29 pounds or $29. So if you set this high point here, the value is $29. So you can say to yourself, okay, if the stock price goes to $30, you're going to buy, because if it goes to $30, it has gone past this high point, and then you can buy in the hope that it's going to keep going higher. So again, this is how you can use this basic technical analysis to help you with your decision making. And we'll go back to Apple and see. And same true. If you're having a stock and it forms a low point there, forms a high point there. Now, if it falls back down and it goes past that low point there, then there's a tendency it's going to fall and make another low point. Now, if it goes back up again, like I say, if it falls back down again and it crosses that low point, tendency is going to fall again and form another low point. Again, not a guarantee tendency. So if you're seeing that, you're saying to yourself, okay, let's say you see this around this point here, you see that happen around there. You can say to yourself, okay, if this market falls again, let's assume this is $30 now. So you can say to yourself, the market falls and it falls to, let's say, $28. I'm going to sell and get out and sell that stock, because there's a chance that it's going to keep falling and you want to cut your losses and run. So let's go back to Apple. So for example, now, if I say, okay, I want to buy Apple, obviously you can see my cursor everywhere I put my cursor, it tells you the price. So you can see the price next to the cursor there. So you can see the high point here then. So you can see that high point here. You can see it shows you the price there is 13254. 13254. Let me write that, 13254. 132.54. So that's that previous high point, the previous high point. So using that knowledge I've just described to you, I now know the previous high point for Apple is 132.54. So if I was looking to buy Apple, I was okay, the evidence I need to tell that Apple is going back up is at least I need to see it at least break this previous high point. So maybe if Apple closes at the share price 133, so if I now see Apple trading at 133, then that's a good indication to me, or at least a hope that, okay, it might be on the way back up. So I might set my target price. I might say, okay, my target price to buy Apple, my target price would then now be 133. So that will be the price I'll be looking out for if I want to buy Apple. But again, as an investor, my decision to buy Apple will first come from my fundamental analysis. So don't forget that. So I'm not just going to come to the Apple chart, look at Apple chart and say I'm going to buy at 133. No, this is just fine tuning when I buy Apple, but that my decision to buy Apple will be based on my fundamental analysis, meaning I have analyzed the US economy, I've analyzed the tech sector, I have looked at the earnings per share of Apple, I've looked at the PE ratio, and I've then decided at that point, based on the fundamental analysis, whether I'm buying Apple or not. So that decision, whether to buy Apple or not, will be based on fundamental analysis. Now, once I've decided based on my fundamental analysis, I want to buy Apple, I've already decided from the fundamental analysis, I could just sort of fine tune at what price I buy it coming to the charts. So I just want to stress that out, that I'm not just going to go to Apple and just look at the chart and start buying it without doing fundamental analysis. Again, we're talking investing here, okay? So fundamental analysis is crucial. Trying to think which other, any suggestion of another stock I can quickly look at as an example. Look at that. If you pop a stock into the chart box that I can use as an example again, apart from Apple, I just want to do one more example. Amazon, okay, let's look at Amazon. AMZN. Okay, so that's Amazon. Let's go to charts and performance. Okay, so you can see Amazon. So again, you can see, obviously, you can see where Amazon was trending up, but you can see it's been going sideways since about, you can see anywhere I put my cursor here, it shows you the date and the prices. So you can see around September last year, when it reached a high point in September last year of $3,547 per share. Since that high of September last year, it's just been going sideways. Okay, so it's just been going sideways. It's not going anywhere. So looking at the most recent point here, you can see where it's from that high point. So it's gone to a high there, and you can see it's fallen sharply. So like say, yeah, so it's the same thing too, like we did for Apple. We can say, okay, this was the most recent high point, 346742, 346742, 346742, 3467. Very expensive stock. Amazon. Probably will do a stock split soon. So that's the previous high point. So I can then say, obviously, this is we're talking thousands here. So I'll probably say, okay, if it gets up to maybe 3,000, I mean, there's no hard and fast rule. Any price above this is fine. You just have to use your own judgment. But I'll just put here 367, 68, 69, 70. So I'll say 3,470. So basically about $3 higher. So I can say that's my target price. If Amazon closes above this price, and then I'll be looking at buying Amazon, because if it closes above that price, it means it has gone beyond the previous highest point, most recent high point. And again, a chance that it might keep going up to make another high. But again, there are no guarantees. Okay. But obviously, if I'm seeing this, I'm not, I'll be thinking, okay, maybe this is not a good time to buy Amazon. Let me watch the price and see if it's going to keep falling and look for evidence of it going back up. But again, I keep stressing my decision to buy or not would initially come from my fundamental analysis. And then you just go to a bit of technical analysis to fine tune at what price you buy it or when you buy it based on the chart. Seems as if all the stocks are coming. Who can give us an example of a non-tech stock? Let's have a non-tech stock. put a non-tech stock in the chat box. Let's try a non-tech stock. We've tried Apple and Amazon, but they're both in the tech. What company is that? SPZ. I've never heard of that company. Let's see. SPZ. Tayo, your company, I can't find your company. Let's try BAC. Bank of America. Okay, let's see. Okay, so Bank of America. That's actually my bank. A bank with Bank of America. Let's see what they're doing. They're not, I don't invest in, I don't have shares in Bank of America. I just bank with them. Probably looking at their charts, maybe I should have bought shares in them. So you can see Bank of America shares, you can see this is trending up. So you can see compared to the Amazon chart and the Apple chart, you can just see it's going up, up, up. So again, going back to your knowledge, again, if I've decided to buy Bank of America shares based on my fundamental analysis, I can say to myself, okay, let me wait for it to pull back. Let me go back to the white chart. I say white chart, whiteboard. So we can see Bank of America is already doing this, is going up. And you can see it's currently like this on the way up. So I might say, okay, let me wait for it to pull back. So let me wait for a pullback. So I can say, okay, now that it's going on, let me wait for it to pull back, because usually you're not sure if it's going to run out of steam. Because if it pulls back and then starts to fall, then you wouldn't have made a mistake of buying at the height. So you wait for a pullback, and when it pulls back, then wait for evidence that it's going back up again, and then you can buy. But again, I keep stressing, this is all just, when you're investing in the long term, this is just being pedantic and finicky. You can really just decide to buy based solely on your fundamental analysis, like I taught you during the course. But yes, like I said, if you can learn how to read charts and fine tune it, the better. But again, like I said, please don't tear your head out thinking you have to master this. If you can, fine. If you can't, don't worry. But again, you can see how I'm using that basic knowledge to decide when to buy, how to buy, just based on the chart. So going back to let's go back to Bank of America. So you can see it's going up now. So it hasn't, I'm going to wait for it to pull back, because again, like I said, the market doesn't go up in a straight line, as you can see. So you can see it will go up, come down, 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 go up. So, and now that this is what we're seeing today, it's gone up. I'm going to wait for a rally. So again, you can see how you can use this decision based on the basic technical analysis to decide when to buy, when to sell, when to hold on. Let me actually try an airline, because the airline stocks are beginning to pick up. American Airlines. Airline stocks, obviously, with the travel restrictions sort of easing with the vaccination and the COVID crisis, some of these airline stocks are picking up. So let's have a look at the chart of one of them. Okay, so obviously you can see how the airline stocks were flat. Obviously, this gives you the time frame you can use. I'm currently just looking over a year, 1 year time span. Let's go to 3-year time span, just to show you how bad COVID affected them. So you can see American Airlines was just churning its way down. Of course, you can see that sharp fall in February of last year, which was obviously during the COVID time. There was a sharp fall in the prices. So again, this is where sort of technical analysis could help you when you want to sell shares. So if you had shares in American Airlines and you then see this happening where it broke that previous low point, So you can see the low there is 24.45. So you can say, okay, if my American Airlines shares drop to $23, I'm going to sell it. So once it falls and gets to $23, you just say, okay, I'm selling it because there's a chance it's just going to keep falling. Again, not a guarantee. Okay, you know, technical analysis does not predict the future. So it's not a guarantee. It's just a guide. It's not a guarantee. But you can see now with the restrictions being lifted, you can see they're slowly recovering, American Airlines. But again, you can see where from the high point there, from the low, you can see that high is lower than the previous high. Then it's fallen back down. You can see this low is lower than the previous low. You can see it's gone back up. That high is lower than the previous high. So you can see now it's now forming lower lows. Sorry, it's forming lower highs and lower lows. So it looks like, you know, it's the American Airlines share price now is now downtrending. So it's now in a position to sell, not to buy. So again, if I was thinking of buying American Airlines shares just based on this chart pattern, I might be reluctant to buy now until I see evidence of it going up again. So again, you can see how just this basic technical analysis can help you sometimes with refining your decision. But again, kind of stress the point that, you know, you don't have to, because if you're doing it for the long term, which is what long-term investment is all about, it can all pan out well. Okay, any questions? This wasn't meant to be a PhD session, so just to highlight some of this basic stuff that can help you fine-tune your investing, when to buy shares, when to sell them. But like I said, don't go crazy with it. Any questions on what we've discussed so far, or any questions in general on investing? Because it's also a question and answer session. Any questions in general, comments? Or you all want to go have your dinner?
Dr. Remy.
Hello, Diana. Hi, how are you?
I thought my understanding was to sell high and buy low.
Sell high. In reference to what?
What we're doing. I thought we buy. You're showing the chart here, right? And I see that you're saying to buy at the high point. Don't we buy when the stocks are lower than what it is?
No, I think actually that's a good question, because this is why I said you don't start at the end of this. This is just the end.
Okay.
So that's why I'm happy you asked that question, so I can clarify that again. So, for example, if I've already done my analysis on a stock, let's use American Airlines, for example. So if I would have done my analysis on America, the airline industry, and I would have looked at the profitability of American Airlines, the P ratio, I would have done all that. So if based on that fundamental analysis, if my decision was I don't want to buy this stock because I don't like what I'm seeing, it's not profitable, they're not doing well, I wouldn't have even looked at the chart. I would have already made my decision not to buy based on my fundamental analysis. Now, if I've now made a decision that, okay, the airline industry is doing well, they're recovering, American Airlines is profitable, the P ratio is good, and I want to buy it, I've already made the decision to buy. I'm just now deciding at what price am I going to buy it. So you can see what I mean. That's why I'm saying this.
Okay.
The technical analysis is not, you're not just going to say, you're not going to ignore fundamental analysis and just jump here and buy the stock. That's what I'm trying to say. Yeah. So if I already made my decision to buy American Airlines shares, for example, like I said, I would have more often than not, I'll just buy it regardless of what the chart is saying. But like I say, if I want to just fine tune the bit, I've already made a decision to buy based on my fundamental analysis by myself. Okay, looking at this chart, it looks like it's downtrending. So I might, again, keyword is I might want to buy, because if I buy at this point at the price of 21.57, it might still fall even lower because it's forming lower lows and lower highs. So it might keep going lower, lower, lower again.
Okay, so it's knowing when to get into the market.
But yes, but to get into it, because you want evidence is going back up, and as you know, going back to the basics, evidence that is going back up means that the price has now gone higher than the previous high. And then that would be a good time to. So sometimes what I actually just do, I'll just go to the most recent highest point. So this is the most recent highest point, 24.97. And I'll say, okay, if the market closes at $25, I'll buy, meaning that it has gone beyond that previous high point. But again, I keep stressing, this is just being pedantic. It really, and that's why I kept stressing during the presentation, don't tear your head about trying to do this and get yourself in a tease that before you know it, you now become a trader, monitoring your chart every day as an investor, which is what you should not be doing.
Okay.
95% of your decision making should be based on your fundamental analysis. But yeah, you can just, but yeah, if you're really comfortable with reading charts, you're really comfortable at doing this, then yes. Actually, let me quickly show you something. Because obviously, because I trade a lot, and of course, I've been trading for 20 years. So that's why it's just a habit. Where's my folder? Stock screening, here we are. So stock screening, here we are, okay. So this is what I do sometimes. So you can see with this sort of chart I have that of some stocks I'm watching. So you can see I have target buy price. Can you see that?
Yes.
Yeah, so this is how I get to the target buy price, and they keep changing because obviously the charts keep moving up or down. So the target price might change. And that's how I come up with the target price. But again, sometimes, I mean, there are quite a few stocks I bought where I love the company so much from what they do, their products and services, the industry, their profitability, the P ratio was showing undervalued. I just bought it. Regardless, I didn't even look at the chart. And that's, like I said, that's the key to long-term investing.
Sure.
This is just an added bonus if you can do it. But if you can't and it's causing too much headache, like I said, and this is actually why I don't spend too much time on this during the course, because I know if I do, people will just go off track and not focus on the important thing and start to get themselves confused with this. Whereas as a trader, yes, I spend a lot of time with this as a trader. You good with that, Diana?
Thank you.
Pleasure. Tayo, does technical analysis apply to ETFs? Yes, you can also use it for ETFs. Let me see, what ETF can I bring up now? I think I'll just type ETF and go with any ETF, really. So we'll just go with any, these are some ETFs. I'll go with this Amundi Europe Healthcare ETF. So any ETF will do, is just to show us an example. So basically, that's what we say. Anything that has charts. So it's the chart you're looking at. That's why I said the chart of any market, any stock, any mutual fund. Yeah, you can use it. So again, you can see the ETF of this healthcare. You can see it's been all over the place. It's neither been going up or going down, which means it's been going. But again, you can see most recently when it got to a low point there, you can see it's now trending up from the high point, a low point, a high point, a low point, a high point. So you can see it's forming higher highs and higher lows. It went flat sideways a bit and started going back up again. So that's what I was saying before, that again, it's not a guarantee, but you can see here when it broke this high point, it went from the new high, rallied from the new high again, pull back, and then from the new high. But you can see now you go to that new high point, it's now forming lower lows. If from the low there, a high, a low. So you can see now that high is lower than that previous high. This low is lower than the previous low. So it now looks like it's downtrending. So again, if I was thinking of buying this ETF, this year is not a good sign. So again, I want to wait till I can see it's now gone past the previous high point and on the way back up before I buy. So yes, you can use it for ETFs, you can use it for mutual funds, because you're just looking at the prices. But again, your decision to buy this mutual fund will be based on your analysis of the healthcare sector and whether you think the healthcare sector is going to do well long term. So your decision is not going to be based on this. This is just fine tuning what time you buy. And again, like I keep saying, it's not really that important. Oh, Uzo, phew. You're relieved, Uzo. You're relieved that you don't have to do all this stress with technical analysis. But yes, yeah, you don't have to. So for example, now, if you feel strongly about the healthcare sector, you've done your analysis, you've done your research, and you feel the healthcare sector is going to do very well over the next 3 to 5 years, you just buy the ETF. Don't bother about this, because again, like I said, technical analysis is no guarantee. Because for example, you can see where it was going up. So let's just assume here you were looking at the chart and it was saying it making higher highs and higher lows. And at this point, you say, okay, I want to buy. You can see it pull back. You can see it went up. So you could have bought around that point and then it fell back down. There's no guarantee. And again, don't forget, you're not day trading, you're investing long term. Because you're not, as an investor, you're not worried about where the market is going to be over the next day or the next week or the next month. You're doing your analysis based on long-term trends, where to be in the next couple of years. So again, that's why I said this helps, but it's not crucial. Any more questions? Okay. So there are no more questions. I wish you all a very good evening. The recording, as usual, will be posted on the platform. Once it's been processed, it will be posted on the platform. And of course, as usual, if you have questions later, you can always ask it on the platform. So I wish you all a very good evening. Keep safe. And
Thank you.
pleasure.